Hello, everyone, and welcome to this Minerva's webinar. Our discussion today centers around the 2023 Proxy Season Review, delving into voting activities across three major regions, Europe, US, and the UK. Utilizing data from three indices collated by Minerva's parent company, Solactive, we'll analyze key insights from 2023 and examine trends dating back to 2019. I'm Maria Barata, your host for today, and an account executive at Minerva Analytics. Joining me is our senior stewardship analyst and ESG voting expert, Thomas Bolger. Hi, Thomas.
Hi, Maria, and hello, everyone tuning in today.
Thomas, a few months back, you wrote a preview for the 2023 proxy voting. Now, having a comprehensive overview of the year, have you observed significant shifts in key trends? Also, in your previous report, you highlighted the emergent focus on environmental and social issues, as well as anti-ESG garnering increased shareholder attention and resolution. Is this trend persisting as the year unfolds?
So in the preview, we did anticipate there would be a few different items trending, so namely consideration of social issues, biodiversity and climate change, as well as great expectations on board responsibility for ESG oversight, as well as a rise in anti-ESG activism. So all of these issues were key factors in the 2023 voting season for shareholders and boards. We can briefly discuss each of these. So in regard to social issues, we have seen shareholder proposals being filed on our social factors at an increasing rate. So the types of social focus proposals being filed do tend to lag actual trends in society. So we've seen more proposals being filed seeking disclosure on companies' approach to managing risks associated with reproductive rights following the overturn of Roe versus Wade in the US, as well as more proposals on labour rights and the freedom of association as workers' living wages are impacted by inflation and cost of living challenges. So on this note, it was actually recently disclosed that Starbucks is facing a proxy contest due to its approach to labour rights. So the use of proxy contests by shareholder activists is an area where we anticipate further action, particularly following the adoption of the universal proxy cards in the US markets. And then another way that social factors are being considered is on remuneration, with pay disparity between executives and workers facing closer scrutiny. And this has been an important issue since the coronavirus pandemic. So climate continues to be a key focus area for investors, companies, and regulators alike, and voting on climate-related shareholder proposals, as well as board proposals on climate votes, continue to be key focus areas. And they were important considerations in this year's proxy season. So biodiversity is also continuing to rise up the agenda. On the launch of Nature Action 100 and the pending finalization of a task force on nature-related financial disclosures will accelerate the focus in this area. And finally, so anti-ESG. So anti-ESG is continuing to impact stewardship and voting. So there have been state laws introduced in the United States limiting the ability to consider ESG in investment considerations. In addition, large asset managers have been facing pressure over their perceived ESG activity. There's also been an increase in the number of anti-ESG shareholder proposals being filed. So while there has been an increase in anti-ESG shareholder proposals, these proposals have failed to gain traction in terms of shareholder support. So on average, they do receive less than 10% votes in favour. But although there's tends to be a lack of support for these proposals, the anti-ESG movement is creating a debate in the area and potentially impacting asset manager behaviour as they seek to avoid political attention.
Thank you, Thomas.
What about board expectation on ESG in light of those trends? And do you have any thoughts, or either this will continue to be key issues in 2024?
So on board oversight, we have seen investors update their voting policies to clarify their approach to holding individual directors accountable for perceived failures in ESG risk management, such as climate risk disclosure. Although there still might be a lack of consistency on who on the board should be held accountable. So some investors may hold the chair of the board accountable, whilst others will target the chair or members of an ESG committee. But we are seeing higher standards and accountability for boards as investors look for more transparency and disclosure from boards on their ESG performance and governance practices. So this transparency and disclosure factors are also key issues for regulators as they start to look into, say, greenwashing and false or misleading claims around ESG. So the composition of the board is also of particular importance in the current environment as investors look to ensure boards are providing effective oversight of financial and ESG risks and opportunities in the current uncertain economic environment. So we do anticipate that these various factors will continue to be key areas in the 2024 voting season. Another area which has raised expectations recently is around on-board diversity. So listing rules in both the US and the UK market now ask companies to publish data on the composition of the board by both gender and ethnicity. So this increased expectation around diversity will filter through to shareholder voting activity and may also raise shareholder expectations for companies and boards on a global basis.
Thank you, Thomas. The briefing reviews each market, Europe, US, and UK, and the voting results collected by Minerva covers 12 months from 1st of July to 30th June. Would you be able to share more details about the data from the shareholders meeting during that same period?
Thanks, Maria. So I think, to begin the discussion of this year's voting review, we can begin by outlining what exactly is included in the analysis before going into more detail and discussing the voting trends. So the analysis looks at meetings held by companies in 3 Solactive indexes covering the UK, Europe, and the United States. So the analysis looks at 5 years of voting data from 2018 to 2023, and a year is defined, as you said, for 12 months from 1st of July to 30th of June. So in terms of the 2023 proxy season, there was an aggregate 1,427 meetings analysed, and that resulted in 23,679 resolutions across the 3 markets. So in terms of the number of, say, meetings and resolutions, one trend we have identified that is the number of resolutions being voted on by shareholders across all 3 markets is increasing. So the average number of resolutions being considered at an AGM has consecutively increased year on year since 2021.
Thank you. So the election of directors and approvals of directors' remuneration are important shareholder rights. And how shareholders express their view through voting are also important consideration. How have shareholders been using this right in 2023? And are there any difference across the 3 markets?
So the headline voting statistics here is that the analysis found that average shareholder support in the US was 93.14%. So this is a lower level of support compared to both Europe and the UK, which had support levels of 95.75% and 96.54% respectively. So the analysis did find that shareholders from the US market are more likely to withhold support from management than the other 2 markets, although this figure does show that across all markets, shareholders still do vote in line with management more than 93% of the time. So then looking at, say, in terms of the proportion of resolutions receiving high dissents, which at Minerva we define as being 20% or more of the votes being cast against management recommendation, it shows that 6.6% of resolutions in the US received high dissents, which again is a higher number when compared to both Europe and the UK of 3.6% and 2.8%. So when we move on from dissent to look at the actual number of board proposed resolutions being voted down by shareholders, we can see that remuneration related votes were the most rejected board proposed resolutions in Europe and the US, with the US in particular standing out in terms of the number of remuneration defeats. But in contrast, capital authorities were the most rejected board proposed resolution in the UK. So that's with investors looking to protect themselves from dilution of their holdings when our boards seek approval to disapply preemption rights on the issue of shares. And this high dissent level could be related to the preemption group guidelines in the UK, which recently raised the recommendation for the disapplication of preemption rights from 10% to 20% in aggregates. Additionally, authorities to disapply preemption rights on share issues in the UK is also subject to a special majority, which increases the chances of a resolution being voted down, rather than a resolution being subject to a majority vote, which just requires 50% plus one vote in favour.
So being an active owner means that shareholders take an active role with investee companies. Putting forward shareholder proposals is one of the examples of engaging with companies. How receptive have been both shareholders and the board with shareholders' proposals?
So yeah, that's right, Maria. So shareholder proposals are an important engagement mechanism. They allow investors to use their formal rights as owners to publicly and also transparently escalate important matters and directly interact with a company's board. So an increasing number of shareholder proposals are being put forward on environmental and social factors such as climate change and human rights, although a large proportion of proposals continue to address traditional governance concerns, i.e. board remuneration and shareholder rights. So shareholder proposals are more of a prominent feature in the US market when compared to both the Europe and the UK markets. And there's a number of reasons for this difference. So there's different regulatory rules, as the rules in the US are more open to shareholder proposals. So for example, there's been an increase in shareholder proposals coming to the ballots following changes by the Securities Exchange Commission, which reduced the ability of companies to be able to request exclusion of proposals from meeting agendas. Additionally, in the absence of an independent national corporate governance code, such as the UK Corporate Governance Code, shareholders may be using resolutions as a tool to try and improve corporate governance practice at companies in the US market. There's also just the fact that not all countries have a culture of direct shareholder communication and dialogue. So the analysis found that whilst there has been a global increase in the number of shareholder proposals being voted on, both average support and the number of proposals receiving majority support have declined. So the number of successful proposals in Europe and the US fell in 2023, while the number of successful proposals in the UK market did actually rise. However, this was solely due to a successful proxy contest at Capricorn Energy.
Thanks, Thomas. With the increase of shareholder proposals, did the analysis find any changes in the way shareholders approach voting on shareholder proposals?
So what we have tended to see is investors adopting, say, evaluation frameworks for shareholder proposals and also adopting merit-based voting approaches to proposals. So we think there's several factors which are important for shareholders when evaluating shareholder proposals. So some of them are materiality, whether the proposal topic is financially material and relevant to the company and the sector in which it operates, the prescriptiveness of the proposal, i.e. is the proposal overly burdensome on the board to implement, such as by seeking to direct strategy or operational activity, the company practice itself, whether the company's existing disclosure and practice meets market expectation, and the board demonstrates awareness of the issue and progress in addressing the underlying concern, as well as say whether the proposal is actually value adding to what the board is already doing, as well as who has actually filed the proposal. Is it filed by institutional investors or an activist organization with an agenda? So this is particularly a growing area of focus due to the politicization of shareholder activism and the rise of anti-ESG shareholder proposals. So an issue for shareholders is when markets do not actually require companies to disclose the identity of the shareholder proposal proponents in meeting materials. So this non-disclosure means shareholders do not have the full picture of the proposal on which they are voting on, and also limits their ability, say, to determine if a proponent has similarly aligned values to the investor.
Thank you, Thomas. COP28, climate change has been on everyone's mind. Am I right? What did you find out?
So COP28 and also just the international focus on climate change generally is impacting shareholders and boards in several ways. So this includes the increasing awareness and demand for climate-related disclosures for companies, especially for disclosures in line with the TCFD recommendations, raising awareness and opportunities for investing in climate change solutions, and also influencing and raising expectations around engagement, voting, and also lobbying around climate-related issues. At the same time as increased expectations for, say, action and disclosure, it also re-emphasizes the challenges and costs of adapting and mitigating the impacts of climate change, such as extreme weather events, sea level rises, biodiversity loss, and human displacements. So it's also highlighting the need for urgent action in this area. So it is now accepted that climate risks have clear financial implications for institutional investors, which does give them a key role in driving the climate transition and engaging with investee companies over their climate action plans.
That's interesting. In terms of actual voting on climate resolutions, what have been happening in recent years?
So in the briefing, the analysis looks at, in particular, say on climate voting. So what's been happening in terms of the number of resolutions being proposed by boards on their climate plans, and also what are the voting trends on these resolutions. So the 2020 voting season was the first in which companies in this research universe put forward a resolution seeking approval of the climate transition plan. The 2022 proxy season represents the peak in the number of companies holding a vote on, say, on climate. And so far, 2021 was the only year in which a US company held a say on climate votes. So there was no say on climate vote in 2022 or this year in the US. So the number of say on climate votes did fall in 2023. This is partly due to companies opting to hold a vote every 3 years rather than annual, as well as a loss of momentum for the Say on Climate initiative and mixed support from investors for its adoption. Companies may have also been hesitant to put forward a vote given the increase in dissents we've seen on Say on Climate votes, and also the associated reputational risks for high dissent on a climate vote. The lack of established standards, regulations, and good practice guidance for Say on Climate votes may also be impacting wider adoption by boards. So we've seen different approaches taken, whether it's annual or 3-year votes, whether it's an action plan or a climate progress report, as well as impacting shareholder ability to apply consistent voting guidelines on these votes due to the different approaches. So in terms of actual voting results, the average support level in 2023 for Say on Climate votes stood at 86.93%. And what the analysis did find is that this support level has consecutively declined each year since 2020. So this suggests that the first mover advantage for adopting Say on Climate votes has been lost by companies, and shareholders are now expecting companies to go beyond pledges and commitments and actually provide detail and disclosure on the actual targets and how they actually intend to meet these commitments. So there's raised expectations for companies. But one thing we did identify is there were governance concerns with Say on Climate votes during the year after oil majors such as BP and Shell actually scaled back their climate targets, stating a need for increased investment in oil and gas in order to meet energy demands due to the current economic environment and energy instability. So this raises a governance question for shareholders, given the targets were amended after the company's climate transition action plans were actually approved by shareholders.
That's a lot of detail, Thomas. Thank you. And what does the stewardship setting look like?
So we've identified several key factors impacting stewardship and also the ESG landscape. So these include, say, shareholder proposals. So the global number of shareholder proposals being filed and voting on are reaching record levels. This is for both pro and anti-ESG proposals. So this is creating new considerations for boards and shareholders alike. There's a changing regulatory environment as more market regulators are introducing new rules requiring disclosure on ESG factors as reporting shifts from voluntary to mandatory reporting. And the proposed US Securities and Exchange Commission rule on climate risk disclosures is expected to have a major impact on company reporting. Additionally, it's the International Sustainability Standards Board, the Task Force for Climate-Related Financial Disclosures, and the Task Force for Nature-Related Financial Disclosures will impact global disclosure expectations. Then, the economy and also stakeholder factors are also impacting stewardship and ESG. So there is an uncertain geopolitical and economic environment, which is presenting boards and shareholders with new challenges to consider. So in part due to these external factors and the uncertain global environment, as we also did touch on earlier, there has been a return of focus on the G in ESG and a back to basics approach as companies seek to protect the bottom line in an uncertain operating environment. So investors are looking for companies to demonstrate sound governance and are re-examining board composition, skills, and diversity to ensure boards are well positioned to provide effective oversight of material, long-term financial and sustainability risks and opportunities. Then there's climate change as discussed earlier. So the severe economic, environmental, and social costs of climate change and the need for urgent action are being increasingly recognized. So climate does continue to be a leading ESG factor for investors, and companies are under pressure to address climate change and decarbonize business models. Then there's anti-ESG. So the growing anti-ESG movement in the US is complicating matters for companies and investors and creating more uncertainty and politicization of stewardship. There's litigation. So there continues to be close scrutiny over the conduct of boards and directors. And litigation is being used more and more as a mechanism to put companies under pressure to change behavior. And in particular, we've seen in recent years an increase in climate-related litigation. It's also an increase in industry initiatives. So the number of industry initiatives, both investors and businesses based has increased. So investor initiatives such as Climate Action 100 have raised expectations around engagement on systemic issues. And we expect this to continue to be an important factor in ESG and stewardship. And finally, there's proxy voting and stewardship. So stewardship codes have raised expectations around active ownership and the use of voting rights. There's also been at the same time increased expectations for asset owners in the monitoring of asset managers and the launch of voting choices, which will give asset owners more say over voting, could have another big impact on the ESG landscape in the future. So these factors are shaping and influencing the landscape that investors and boards are operating within. And these are the key factors we think investors and boards should be aware of.
Thank you. So in our in-house award-winning platform, we provide our clients with access to voting results. This page displays the results of each meeting resolution, and for this particular report, we utilized filters to present voting outcomes for a specific period as an index. As we see here, the level of detail shared with clients is extensive. So please reach out if you want to know more.
Thanks, Thomas, for providing a snapshot of the 2023 Proxy Season Review. I'm sure that everyone appreciates your insights and time spent writing the review. I sure do. So thank you.
Thanks, Maria.
Now, before we wrap up, I want to mention that with the growing importance of ESG, Minerva is well positioned to provide you with all your proxy voting and stewardship needs. We are connected and knowledgeable when it comes to responsible and sustainable investing, and a founding member of the industry-leading Net Zero Financial Service Provider Alliance. We have also been widely awarded as a leaders in sustainable investment solutions. Contact us via hello@minerva.info if you are interested in hearing more, or you can reach out to me directly at maria.barata@minerva.info. Please feel free to download the complete briefing attached and stay tuned for our upcoming briefings. Subscribe to our newsletters. You'll be among the first ones to gain access to our next briefings. Until next time, once again, thank you, Thomas.
Thanks, Maria, and thank you everyone for tuning in and joining us today.